What's up, y'all? It's your boy Mel back with another video. In this video, we're going to be going ahead and discussing the intro to market structure. We cannot stress this enough, guys. Market structure is the key. I repeat, is the key foundation on how you'll be able to see the market with your naked eye, right? And what do I mean by that? Market structure gives you bias towards your edge of wanting to know if you're going to be a buyer or seller. Now, typically, the way you want to trade is you want to trade with the direction of the market. Meaning, if the market is on an uptrend, right? As you can see, this arrow is pointing up. We have the market goes down, goes up, goes down, goes up, goes down, goes up. Takes its time going down. But as you can see with the naked eye from moving your eyes from left to right, you can see that this market is clearly moving up, right? And at this point right here, we have this phase called a market cycle where we'll be going up, we'll consolidate, we'll make some type of false breakout, and then we'll go ahead and start making our way down to correct itself. Okay. This is typically how the market moves on a regular basis, right? So as we're going throughout this process, guys, when you're marking up your charts, first off, you want to start identifying where your highs and your lows are. And typically you want to see an easy to see move. When a market moves up and it has a significant retracement, something like this to where it recovers at least, going on half of the move to come back and retest it, to try and gain back some of this profit that the sellers had lost while the buyers were in control of the market, because that's mainly what this comes down to, is who's in control of the market, guys, right? So as you labeling this stuff off in an uptrend, you want to be able to identify the highs in the market. And what I typically like to do is I grab a little trend line tool to be able to identify where, let me move myself out the way. Yeah, let's go here. All right, cool. So typically what I like to do is grab a little random trend line tool to be able to give myself discipline to be able to see the actual swing highs and swing lows. Because when we go into our next session about price action, I want you guys to be able to understand how all of this stuff ties in together, right? So we got to start marking off our higher highs. Whenever the market makes a high or a peak, start thinking of it as peaks and valleys, right? Your peak is at the highest point. Your valley is at the lowest point, right? But it's not always at the lowest point. So I got to be careful with how I use my verbiage as I'm explaining this to you, because I do not want to confuse you. You've been taught all this stuff all your life. You do know that what goes up must come down. And we'll go ahead and use that to be able to create an edge so you can start looking for entries when it comes to paying attention to market structure, right? So when the market moves up and stops right here, I want you guys to go ahead and take a mental note that the market didn't just stop here for no reason, right? Now, clearly you see, as I've drawn this whole structure out, this is typically how the market moves, right? Probably a little more chaotic than this. Is not in always easy to see, but during this training, my only goal is to be able to help you eliminate the noise so you can program your eyes to be able to check out what you need to check out, right? So on every high or every peak on your chart has a reason for it stopping there, right? This is where you start to get into the context of support and resistance, okay? Anytime price comes up above to be able to test a high in an uptrend, every high at that point is your current resistance until your highs get broken. What I mean by that, in an uptrend, you want your highs to be broken, okay? To continue to validate the bias of an uptrend, okay? So here up at the top, right, we have a higher high, and then we create a higher low. This is how the market moves in waves, guys. Pay attention. When a market goes up, it creates a new higher high, right? Because this high is higher than this previous high, right? Anytime price breaks past your previous high and it starts to retrace, a good area to look in to get in for a buy entry, right? Because when market is moving up, we want to trade with the trend. We want to buy with the buyers in the market. These are bad areas to buy up here. Yes, you see a lot of momentum. Yes, you see a lot of moves, but In uptrends, you want to be able to be patient and be disciplined to know that in an uptrend, price wants to come back to these levels that it broke through in order to retest it to gain some more momentum to take back off, right? The market isn't just going to go up forever. I know on certain time frames, lower time frames, it may seem like that's the case, but it's not. The market is not going to go up forever, and it's not going to go down forever. The market has to it has to correct itself. So with you knowing that, when price breaks a high and creates a higher low, you want to buy at the higher low points because you want to buy at the discount, the lowest price you possibly can in order to catch some of this wave and this momentum up, guys, because we get paid when price goes up in our favor when we're looking to buy. Same thing, vice versa, when the market goes down. Okay. We want to sell at the top. We want to sell at the highest price possible in order to catch the wave on the way down. Okay. So let's go ahead and dive into this. When we see a higher high, guys, we label it off. This is, at this point, this higher high area is going to be our level that we pay attention to get back and get retested in order for us to start looking for more buy opportunities. Okay. So when this high got broken, we immediately, when we miss this move, that's okay, right? Because now that you understand structure, you should start making entry reasons on why you're looking to get an entry around the same level of a previous high that it broke. Okay. And the market moves this way in patterns. Anytime price starts retesting or retracing, you want to mark off the highs, the previous highs in an uptrend in order to be able to validate where price could potentially start to find some type of support, right? Find some exhaustion, see some wicks before price starts making its way back up to continue its uptrend. Okay. It doesn't always just move up. It's going to give you some noise, some chaos, some consolidation, because that's just how the market moves, guys. I didn't make this up. I've just been able to, over time, pick up on some of the tendencies of the market and patterns of the market. And after back testing it for, 2 years, 2.5 years, I've been able to pretty much get this stuff down to a science, right? And I'm doing my best to go ahead and explain it to you guys so you guys are able to see how simple market structure can really change the scope of how you trade. In an uptrend, you want to label every higher high, right? And at every previous higher high, you want to start looking for price to find support there. Okay. And in one of my other videos, if you haven't paid attention to it yet, as we get into support and resistance, go watch that video. I'll be explaining in that video exactly what support and resistance is, what's valid, what's not valid. But keep it simple, guys, and stay on track. We'll just go ahead and keep talking about market structure here. All right. So as price came up here, created this high, created this low, created a high, created a low, created a high. After about that third move, you kind of can start getting the feel that price is going to start making its way back down to try and recover. But as long as these highs don't get broken below and price finds support, then your bias can still stay strong toward looking to buy the market, supporting your bias for an uptrend. Okay. Because that's all price is going to create. So as you're marking up your charts to be able to practice, what I want you guys to do is grab, the T or you can go over here, grab the text button. And when you're doing this, I want you guys to try this exercise out to be able to see if this helps you out. I'm pretty sure it will. Find a part on the chart where you're able to see a clear to see move, a swing low all the way to a swing high, right until the market starts seeing some type of indecision or some type of equilibrium up here. This will be an uptrend. So when you're back testing, you want to label out your higher highs. Okay. Let's do this real quick, and I'm going to go ahead and do this with you. So stick with me, guys, as I go ahead and label this out. Okay. Let's get all this jumbo off the screen. Let me see. We got higher high. Let's do another one. Higher high. Let's do another one. Higher high. And the faster way to do this, guys, and I'll show you. A faster way to do this, what I did was just lock in uh, the the symbol that I'm using on here, so I won't have to keep going back and pressing it. Another way to shortcut and become a little more efficient is to on the same text that you just drew. What you can do is go click on the actual text and then go to this little clear like clone copy type of thing, and you press clone and you can just drag it. So however many highs you have, you can count out your highs: 1, 2, 3, 4, 5, 6, 7, right? You can count out your highs and then you can clone it that many times and just drag them there, right? That's an efficient way that I like to do it as well. I think for my higher lows, I'm gonna go ahead and label them that way. Okay. So let's go ahead and do that real quick. It's very important, something that you guys want to do, right? And let's go ahead and make this green because this is where you want to be able to enter, right? Let's go ahead. Boom. 3, 4, 5, 6, 7. Let's just try 7 for now, okay? And let's get on there. See how simple this is, guys? That's how you want to do it. Whatever's going to help you become more efficient, that's what you want to do. The more you understand what you're doing, the less confusion you actually have when you're paying attention to these markets, okay? And that's very important. You don't want to do things that's going to cloud your judgment and have you contradicting your bias, because trading is pretty simple. When you get into the actual details of what to enter, when to enter, what time frames to enter on, none of that matters, honestly, unless you understand what part of the trend you in. And if it gives you an opportunity to put a restriction on your bias, that if you're in a buyer's market where you're creating higher highs and higher lows, you want to look to buy at the higher low areas to give you the most impact and the most probable opportunity to be able to make a profitable trade, because you're trading with the trend. So more of these up moves are going to have more momentum, and more momentum for you when you're actually on the right side of the trend means more profits. Okay. So label off your higher low areas. And as you see in these, got somewhat another one right here. I guess I'll go ahead and label it. Well, we'll just keep it right here. These are the higher low areas. Both of these count. I want you guys to be detailed on here, but I understand I've been doing this for quite a little minute, so I understand what's the actual swing high and the swing low, right? So at these highs, you start marking off the highs, right? Get into the habit of marking off the highs, so you're able to see that past resistance, this resistance right here can become future support. When after price breaks a high, it wants to come back, find support at that previous high in order to start getting some momentum to take back off to the upside again. Okay. It really is that simple. And as we get to the other side, after we've been on the uptrend for quite some time, typically you will see this type of movement on a daily chart. You'll start to notice in the candles are starting to lose momentum, right? As we get to the upside, this is when price is starting to reach its apex, and you'll start seeing price starting to struggle above, like it's like a little barrier up here, right? This is when you start getting ready to hear about like a little range and how price is ranging. It's not really, it's going up and down. Yes, it's moving, but at the same time, it's not really going anywhere. The market isn't trending anymore at that point, right? We just got a whole bunch of mumbo jumbo and consolidating areas. Guys, I'm gonna be honest. I've made money trading, taking advantage of a few opportunities in a consolidating market, because certain pairs pay pretty good when you're actually on the right side of the trend. So if you're buying that support, my entry rules give me a bias to buy at these support levels in a consolidating market, because I know that I need at least 2 or 3 taps on this area before I start considering that, I might not want to buy at this area if we're still not taking off to create higher highs at this point, because the market could be potentially getting ready to reverse, right? So I'm always keeping in mind and being versatile and willing to just adapt to the market, because at the end of the day, that's all you're going to do throughout your journey, is just continue to adapt throughout the market. And what you'll start to notice is that, stuff that you were paying attention to on an uptrend also made sense in the future to the downtrend that got created, right? As you've seen price come down here, and now since we're in a downtrend now, after we took off right here, there's probably some news or something like that impacted price to go ahead and shoot through the roof or shoot through your resistance up here at this area. As we broke down below this support, this is when you start to consider that maybe we, probably tapped into a potential reversal in this area. Normally you'll see some type of wick up here or some type of candlestick formation that shows you a bearish variation dropping down, pulling a lot of momentum down to the downside, breaking these lows and this low, right? So in order for me to start looking for selling opportunities, I gotta see price close below a previous broken high, okay? Or a previous broken higher low, right? Let's not confuse you. This is exactly what I'm saying. When price comes down, breaks past these lows, I would like to see price act as resistance at that point to start giving me a bias and a strong indication that sellers are in complete control of the market, at least at this current moment. Because as you can see here, price came down, broke these lows, but in a way, we still are, it broke structure. And this is where you start to hear about things like that, break of structure. When you hear us tell you that we're waiting on structure to break or price to break structure, that means that we're waiting on price to show us that there's a potential change in the trend. If we've been on an uptrend right here, this is where structure broke, guys. Let's grab a little rectangle and let's make it red. At this point right here, this is pretty much my structure that I'm using and I'm paying attention to as I'm looking at the market, right? These are my high lows at the moment, holding that support. We had a false breakout to show us one last push to the upside before sellers took over the market. Now at this point, this zone, I still need this zone to be broken and closed above, showing me buyers are in control of the market with a bullish engulfing or something, bullish momentum showing me that that buyers are in the market, pushing the market to the upside, right? We didn't see that. So at that point, I'm versatile with it. You got to be able to adapt to the markets and notice that, price came back up here, but didn't create a new higher high at this point. So now you start to label out that, okay, this could have been a lower high. Why? Because this high was lower than your previous most recent high. Does that make sense, guys? I hope it does, right? So when price comes up here, creates this right here, this is where people start to sell. Typically, when I see a big move leave a consolidation zone, I would like to see it recover at least half of that move. And at this case, this is when you dive in fibs and you start seeing the 38.2, 50%, 618, 786, 886, so on and so forth, right? As you get into that video, you'll actually hear me explain that in more detail. But overall, now we're in a seller's market. So you want to start looking to sell in these areas, guys. You want to look to sell at the highest points possible, right? That's where you guys want to look to sell. Not down here. These aren't good entries, right? Places where you mark off some type of structure, right? We want to sell at resistance. Period. We want to sell at resistance. Remember that, guys. Sell at resistance. You want to see some type of exhaustion or some type of wick activity showing you rejection. That gives you the bias that market doesn't want to push up higher. Okay. So when you're paying attention to that stuff, guys, right? At this point right now, this is support for me. So in a downtrend, you want your lows to be broken. In an uptrend, you want your highs to be broken. Okay. Very, very key. So as you can see, whenever I'm looking for a price to find some type of resistance and when it's retracing, right? This is what I'm looking for. I immediately look left within my structure to see if price acted as support or resistance in the past. And in this case right here, sure enough, boom, right here. Price acted as resistance in our uptrend. So I'm looking for a previous structure in the past, right, to be able to quantify why I believe that price will more than likely find some type of resistance here at this area, because price also had resistance at this area before breaking through to create another higher high. Price found support right here. Boom. Resistance, support, support, resistance. So I have 3 or more taps on this area, on this level of price, to be able to give me a strong bias that price is going to find some resistance around here. And this is where I'll start looking for entry. I'll start paying attention to my candlestick analysis, candlestick entry, some type of bearish indication, and see some exhaustion as well, showing that sellers are applying pressure to start pushing price back down, right? Same thing. Start labeling off your lows in the downtrend. Boom, price start retracing here. I'm marking it off, dragging it to the right. Could drag it to the right. Anytime we drag a line out to the right, is to be able to see what price is going to look like in the future, right? And what we do is we look in the past to be able to see the price act as support or resistance in that area in the past. And sure enough, resistance, support, resistance, boom. You see this, guys? Very simple to pay attention to. Resistance. If this was a candle chart, probably wicked up there, right? With these little gaps. Support, resistance, support, resistance, resistance. All of this stuff down here didn't even happen yet, but we marked off this low to give us an opportunity to know that, okay, if price gets down here, we don't think that this is an uptrend right now when price breaks this structure, because we know that this was one of our major swing lows and it created a lower high. So until our lower highs get broken to the upside to start indicating buyer pressure and buyer momentum and control, then we just go ahead and stick to our bias and just be patient, right? Just continue to be patient, guys. These are high probability setups, right? When price comes up here, creates this type of movement here, boom, right? The only way you start thinking that this could be a potential uptrend is if this was to get broken to the upside, break this previous low, close above, and start to head up to the upside. So let me give you a visual of what I mean, exactly what I mean, right? The only way you'll think that this was an uptrend from this move is if price came here, to come to the downside, close above where this price played as support, right? Because it's a strong area, resistance, resistance, support, support, and then headed up to the upside. At this point right here, broken structure was up here and up here, right? But we didn't get that. So we don't really care too much about wanting to buy in these opportunities unless you know there was a complete down move and now price has to recover some of what it lost. Buying in a downtrend and selling in an uptrend is very, very risky because there's a lot of support and resistance areas that it could go to. It's not very predictable all the time. So those are very risky and high probability of you losing out on some money because you're trading against the trend. Now, I'm not saying I'm completely against it, because it's sometime like right here, if I see a double bottom, I will be looking to buy up. Okay. But you have to start setting rules and some criteria for what you need to see at certain levels in order for you to trade against the trend. Other than that, I'm always trading with the trend. So when we have another down move, guys, I'm marking off the lows. At right here, you can say that right here, boom, this could have been previous, this could have been new support. But if you drag this to the left, You can also see that price continue to play as support right there, resistance right here, right? And then just drag it on through. And you're able to pick up on the trend and the habit of the market, right? And that's what you want to do. You want to give yourself the best opportunity to be able to profit in these markets, and you do that by recognizing market structure, okay? As you continue to mark off your lows, boom. You want your lows to get broken. Price breaks your low. Cool. A lot of seller momentum. It broke this low. Boom. Cool. Came back up. Retested. This is where you look to sell. So without using any indicators or any of this extra stuff, you're able to recognize what price looks like when it's in a seller's market and where you want to look to sell. You want to sell at the peak. You want to sell at the highest point where you find some level of support or resistance in the past, right? Right here, you would have known to be able to sell right here because, again, even though I drew a little trend line right there, we can use the same one. That's fine. Let's see. Right? If we put this right here, price didn't just stop there for no reason. You can't immediately look here, right? Why did it stop right there? That's what I asked myself. If it stopped here, I got to look left in order to get right. Boom. Resistance. Boom. You see it, guys? Boom. Right? Some indecision in here. Support. Resistance. And since I know we're in a downtrend, price is creating lower highs and lower lows in this area as well. So when you marking up your downtrend, okay, you want to mark this up as well. You want to say, hey, this is a downtrend. So we'll go ahead and label this red, and we'll go ahead and let's just do here. We'll do, what are you doing? Lower high for your lower highs. And then we'll also do a one for the lower lows. LL. Right. Let's see. Let's just go ahead. We can leave that white. It doesn't matter. As long as you guys can see this. Boom. So now I start counting on my lows, and here as I'm back testing, we got 1, 2, right, 3, 4, and then we got the lowest low. So let's just go ahead and copy that a few times. 1, 2, 3, 4. Okay. Drag it down. This your lowest low. Here. Boom. Here. Here. And we'll go ahead and drag this back down. All right, guys. So peep the pattern, right? Understand what you're looking at. If price is creating lower highs and lower lows, you don't want your resistance to get broken. This is how you know that you're in a strong downtrend, when your resistance is struggling to break to the upside. We want to sell at resistance in a downtrend, and we want to buy at support in an uptrend. It's very simple, guys. Keep it simple. My coach used to say, keep it simple, stupid, or he used to say kiss. I used to hate it when he said it, but now I understand that you can apply this to pretty much anything. You want to keep things simple and easy to see and easy to read, right? At these lower high areas, same thing. You see a lower high, you see the pattern. After a lower low is created, you should start seeing when price starts to retrace, you automatically need to be looking left for some type of resist where price played as support, or you need to be looking at a recently broken low, right? Your most recently broken lower low to act as resistance now for price if it comes up to that level, right? This is why buying in a downtrend is risky, because it may not even come back up to your most recent lower low. it may come and honor something that happened in the past. So you got to be careful. You're a lot more profitable when you sell in a seller's market in a downtrend than you are buying. You're a lot more well off selling in a seller's market, guys. Counter trend trading, I'm not completely against it again, but I've lost more money trading against the trend than I have trading with it. So I just wanted to give you guys that heads up. Hopefully this video gave you somewhat of an introduction to market structure. On the next video, we're going to go ahead and go to a live chart and be able to identify exactly what this looks like, because you don't see any wicks, you don't see any candles, and I want to be able to clarify that as well for you guys. Okay, so we're going to go ahead and stop this video, and I'll see you guys on the next video. All right, peace.